I know firsthand that there are countries, there are billions of people who are still, in the poverty or in the very low income state. And thankfully, due to the internet and mobile phones, today these people are getting internet connection, but they're still paying by the kilobyte in terms of the data charges, right? They're not getting a free flow of data. They're still paying by the kilobyte, by the gigabyte, okay, by the megabyte, and so on. So my point is, true mass adoption, in my mind, is when 90% of the world have access and have digital currencies. And some of it will be in custody, but hopefully most of it will be holding it themselves on their mobile phones, on their computers, on their new wearable computers, Apple Watch or whatever watches, and so on. And hopefully in physical form as well, in these bearer instrument physical paper wallets or ballet wallets. So that's my hope. And because I think if people, think about what is money. To me, money, besides all the classic characteristics, money is actually proof of my work, my labor. We all had summer jobs when we were teenagers. When you mow the lawn, when you babysit for your neighbor, that money you held on to. If you didn't spend it, it's worth a lot less today, 20, 30 years later. Why is it worth a lot less? Because the government, through the monopoly on money, can steal from you, can tax you without you authorizing it. I remember when I first came to the United States in 1989, a $100 bill with that very small Benjamin Franklin. Remember those $100 bills? They were worth a lot of money. Today, a $100 bill, the Benjamin Franklin is bigger, but it's actually worth less. What's with that?
Still worth $100.
Yeah, but what can it buy? No, I'm kidding. Right? My point is, if the rest of the world can buy into an appreciating asset like Bitcoin and cryptocurrency, it would do a lot better for them. Right?
Another question is, I've obviously triggered a few people over the last year or so by refusing to learn how the protocol works, not really running a node properly. I've never done multi-sig. I don't know what an XPub is, and I tend to just avoid all that because it's just too fucking much.
You have the right to do that.
Yeah, and well, I don't, because and I get a lot of people who actually appreciate that, who agree with me. Do you think we have expectations that are too high of users? I know what you're going to say. You're going to call them slaves, Trace, because you did that on my show. But do we have expectations that are too high? And is being self-sovereign with Bitcoin too hard?
This is the blind spot, right? Are
you saying I'm right?
This is the real version of the real population. And we sit here in this room thinking, whoa, I need to understand how a SHA-256 hash works. I need to understand proof of work. People, everyone here, majority of you guys, tried to convert your friends into Bitcoin by explaining how Bitcoin works at the network level, as if you had to explain how a cell phone network works, and that ARM chip sitting inside that phone has to be understood before you're going to buy into owning a cell phone. That's not how it works. So I think this is the blind spot within the Bitcoin community. We focus on the self-sovereign and the technology underneath it, but most people don't give a shit, They just want to buy into this, naturally occurring Ponzi. They want number go up, right? And that drives, the mass adoption. And
it's same for gold, by the way. So I love gold. Gold is valuable because of its chemical properties. But for most of us out here who hold gold, we don't have to have PhDs in chemistry. We don't have to know about the chemical properties, the bonding, the resistance level, all the different chemical aspects of gold, right? We just know gold is good. But the chemistry professors can tell you why gold is really great as a chemical element for natural element for money. So same thing. We're the experts here for Bitcoin. We know about all the things that you refuse to go into, which is fine. Which is absolutely fine. And here, right?
Thank you.
Load it up.
So I think that there is a diplomatic answer here. Like we have, the diplomatic answer is we have to have both. Like the users, they will eventually need to get more sophisticated because they will suffer. They will see funds steal, company close. So let me make you an example. I want to receive money on my blog. I just use PayPal. But then they shut my PayPal down because I'm inappropriate, I'm not politically correct, and now I need Bitcoin. Well, just use Coinbase. But then Coinbase shut me down because of whatever, because they're still a centralized bank. And then, okay, I will use Bitcoin address. But then that's very bad for privacy, and the fees are too high, so nobody pays me anymore. So let's use Lightning Network. Let's use a centralized solution like Bottle Pay, which is very cool. But then European Union changes the KYC regulation, and Bottle Pay has to close down. And so now I have to actually start the server with BTC Pay server. So eventually, the user, the dumb user, will have to learn by suffering to become more sophisticated. On the other hand, the diplomatic answer will be the developers will have to learn to be more user-friendly, more graphic interface. But okay, but that's not entirely true. There is an asymmetry there. The user really do need to get more sophisticated to survive. The developer, I mean, they are open source voluntary developers. They don't give a fuck. They shouldn't give a fuck. You're not paying them. They are open source developers. So their incentives to get across you, they are very, very low because they can use Bitcoin. They can make money where you cannot. So, I mean, you can ask politely, please make me a user interface. But I mean, the way most people present this problem is the way of a spoiled brat. Like, where is my graphic interface? I mean, they don't care. They can use Bitcoin. They are sovereign. They are the next aristocracy of the world if this experiment works. So ask nicely and pay them.
Are you saying I was right?
No, I'm nothing personal here, but there is some like McCormackism going around, like, where is my easy path to Bitcoin?
I'm on your side. I'm on your side.
Thank you. I think we're going to open up the floor now for questions. If anyone's got any questions for this amazing panel, please take advantage.
All right, come on, guys. Someone's got to have a question for this amazing panel. Coming up? All right.
So basically an expansion on something we mentioned yesterday. But Bitcoin turning into just another financial instrument in the eyes of the financial industry. Is that hurting or helping the adoption for the little man?
Well, I'll say it quickly. So remember stocks, like company shares? There used to be bearer stock certificates. You guys remember that? These days, it's all centralized by the DCC. I think DTCC or something like that. So my point is, with Bitcoin, even if the financial institutions try to suck it up and make them into these instruments and securities where they pass it between financial institutions, it's okay because there's still the base layer Bitcoin that we can transact person to person without their permission. So I'm not too worried about it, but it will help adoption.
So this question is, will the sort of financialization of Bitcoin, you know, Bitcoin meets Wall Street, does that help the little man? I think that, well, the adoption of Bitcoin is going to jump massively when we can, like, you know, ring up the stockbroker and buy, or even my retirement funds is already allocated into Bitcoins automatically by some fund manager. So yeah, that means that instantly you get a big step up in adoption. But you know, Bitcoin might not be Bitcoin when that happens, right? There's the spirit of Bitcoin, of self-sovereignty, and so I can sort of see this thing going, and we have worldwide adoption and mass adoption, and actually it's not Bitcoin anymore. I think that's danger.
Here's an example of how mass adoption is here already, and that is scams. So I operate Bitcoin, next-gen ATMs, which does many things, Vault Logic, but people are told, go to this payment kiosk, no mention of Bitcoin. Put this code into the machines, QR code, no mention of Bitcoin. Pay your fine to the IRS, buy concert tickets, and people do it. They don't know it's Bitcoin. Put cash in the machine, and you will free your brother-in-law from jail because someone was persuaded that the brother-in-law was in jail. That's happening already. I know it is because that's the industry I'm in. So in some ways, hooray, no one knows we're using Bitcoin. The stupidest people, in fact, are falling for these scams. So how do we prevent that? How do we fix that? I mean, I just wanted to share that. It's interesting. You know, evidence of mass adoption, scams are working.
Well, first of all, kudos for saying that your industry is scams. I mean, that's true for everybody, but nobody is so honest. So great. No, I agree. Like one of the most bullish things that I ever seen was actually the tutorial of the crypto locker. The ransomware evolved their tutorial. Their tutorial was the perfect normie tutorial for Bitcoin because these people know how to. I mean, ransom is a bad but perfect use case for Bitcoin, and these people really learn how to do mass adoption instructions. So it was very, very good. And yeah, I'm sorry, but yeah, that's true.
So, yeah, I have more than a question. It's like a thought about what Bobby Lee said earlier. I don't really agree with what you said about wallets because you said that with every wallet, you're actually trusting somebody, and it's kind of true. But the point is, with like an open source wallet, you're either trusting yourself if you can actually read the code, or maybe somebody else you already trust, like for other reasons, social reasons, to read the code for you. And that is not true for like your product because here there's no like there's nobody that can look into your or maybe you could open it up, but you have no like guarantee that the thing you show to the outside is actually what's going on behind. So
Yeah.
I don't know. I don't think it's.
We open source the software, the decryption software. It's a BIP38 standard open source. We will sort of open source a process by allowing people to come to our facilities to audit how we make them. But the reality is our product is not designed for people who can read software. If you can audit open source software, our product is not for you. And I challenge you, by the way. For example, a case with Bread Wallet. I hope any Bread Wallet people here. Bread Wallet is open source. You can audit it. But my colleague at BTC China a few years ago, he downloaded Bread Wallet, put in Bitcoins, and guess what? 2 minutes later, his Bitcoins were gone.
I do understand that.
And the problem is, you audit the software, that's fine. Or you have someone, trusted people audit the software. They say, Bread Wallet's good to go. But the problem is, the version you have installed on your phone, it's very hard for you to prove that that's a version that was so-called audited.
I don't think it is. Like, for most.
Well, then how did my friend get hacked? Because he downloaded a faulty version.
I could ask somebody who I trust to review the code for me.
Do you compile your own mobile apps?
Yeah, I do because I'm a developer. But the point
Do you compile your own operating system?
Yeah.
Do you, so Android phone? Do you design the own chips?
No.
Do you have your own chip fab?
No, I mean my.
Do you
point
make
is-
your own RAM?
So you're saying that.
My
like,
point is you
you're
can't check
comparing-
everything.
I understand, but the point is, I'm fairly, I don't know, confident that nobody backdoored my ARM chip on my phone to steal bitcoins, because it's like commodity hardware. It's like generalized.
Wait, so you think your ARM chip has no bugs in it?
No, I'm not saying that. I'm saying that.
My point is,
I'm
it's
either.
sure you eventually you can check everything, but
No, I'm not saying that. I'm saying that I would either use, I would prefer to use like a generic laptop, air-gapped laptop, compared
I agree
to
with
an
you.
hardware wallet. because
I
it's
agree with
generic
you.
hardware.
You should do that. You should do that.
And people who trust me, like people in my social.
You should do that. But actually, your parents and grandparents, do you want them to use that process to hold their Bitcoin?
No,
or do you
but if
think
they
it's
trust
better
me-
for them to use this?
If they trust me, I can actually I can compile the app for them and install it on their phone.
Exactly.
And that's-
I've been in Bitcoin for 9 years. 9 years ago, 7, 8, 9 years ago, I did the same thing. I set up these computers, the hardware wallets for my friends and family. After a while, it's too darn complicated. It's not worth my time anymore. So my question is, everything you're doing for yourself, I applaud you. That's great. I do the same, just like you do. Okay?
I personally wouldn't trust myself. I wouldn't make that product because the only thing I would do is for people who trust me, I will install the app on their phone. And if some other people doesn't trust me, that's fine. I wouldn't go
So
out
now
and-
you're asking them to trust you.
No,
Same
no,
thing.
No, I'm not saying that. I'm saying that people can voluntarily trust me and come to me.
That's
and ask
that's
me.
what I'm doing. People voluntarily trust me to use this product.
Yeah,
If
but
you don't trust me, don't use it.
They all have to trust you, and you're.
They
not
don't have to
super-
trust me.
Yeah, they
Remember,
have to trust you. They have to
the
trust you.
world, people have choice. People who trust me use this product. People who trust you use your solution. That's fine.
Yeah, people have to trust you to use the product, and there's no other way. While
That,
if I make
that-
wallet,
my
people
point
can
is
trust
that is true of everything. When you go buy Coca-Cola at 7-Eleven store, you trust the brand Coca-Cola. You open it up, there's no rat poison in there.
Oh, sorry.
Am I right? You
Okay.
trust 7-Eleven, there's no rat poison in there. My point is,
I-
with physical world, there's always trust involved.
I
If
don't
you
know
think
if
that's not the
one-
case, I debate you.
I don't know
Like
of
I
one
said,
software
just
developer
disagree.
that compiles their own code, that compiles their own operating system, but also have audited the hardware chips on that device or manufactured them themselves. I kind of think this is another weakness of this ethos of don't trust, verify, is that in practical circumstances, for the majority of people, particularly at mass adoption, it's not viable.
Yeah, and part of this is when you have $100 of Bitcoin, you can put $100 of thought into securing it. When you have $10 billion on because you're running an exchange, you need to put a little bit more thought into it. And there's always going to be this trade-off between security and convenience and cost and time. And, love my family, but them free riding off of all of my time, it's just, I got other things to do, like let's play Monopoly or something.
So I agree about trade-offs and compromises, necessity between easiness and security, but I think it's a little bit dishonest to use the argument, to use the plain argument that everything is trusted anyway. Because, that's literally, it's literally true, but it's contextually dishonest because let's imagine, okay, I give you a hard disk will break after 2 days. You come back to me, this hard disk doesn't last. Okay, but the sun will eventually destroy the Earth anyway, so nothing will last forever. That's literally true, but we are talking context. In the context of an hard drive, in order not to be a scam, it must be seriously, it must probably survive for a few years, while in the context of Bitcoin, not having to trust, that doesn't mean not having to trust. Maybe we live in a simulation, and so your private key are matrix private key anyway. Okay, that's true, but there is a context in which having a complete closed enterprise process is a absolutely different level of security than having an open source reviewed code, which is okay. You may choose the other, as you said, but you cannot represent everything as equal. It's seriously unequal to have open source software that can be checked by everybody eventually, or having something which is closed with NDAs and stuff.
I'm not saying it's equal.
Yeah, and another, just looking at it pragmatically, when we, at Armory, we had inbound customer requests, and we were just open source anyways, so, we're just doing customer support, but not really getting paid for it. But the people mostly, they never got hacked. That's not how they lost their Bitcoin. They lost their Bitcoin because they lost their backup or something. And our inbound customer requests, the people who came towards us with that were storing in excess of 5 million Bitcoin total. In almost every case, where any Bitcoins are lost, it's from user error because they lost their backup or something. They very rarely, if ever, got hacked. It was very, very interesting just to see that. And so if you're using a Purism laptop and you got a good hardware stack on there that's clean and open source and it doesn't have a Wi-Fi card in it, you've raised that barrier on somebody to compromise your private keys really, really high.
Can I just comment? So I really like your point. It's about ease of use. No matter how secure your thing is, if you reduce the ease of use, people screw up, and then the coins are lost. I think more coins are lost through the loss of passwords and passphrases and screwing up the recovery stuff than coins are stolen. I think millions of Bitcoins are dead because of that, right? So that's something to pay attention to. It's not about open source. Open source doesn't solve that problem. Trustless doesn't solve that problem, right? I'm not saying trustless and open source are bad things. I'm just saying that don't forget the other side of the argument. Thank you, Trace, for mentioning that.
I'm going to let you into a secret. I've never once reviewed any open source code for anything ever. I wouldn't know how to. I don't even know anyone who can. And I think there's more people probably like me than like that. It's a little secret. Are we done? All right. Thank you. Thank you to everyone.
We've achieved mass adoption. That's great. That's great. Me too. I would go. I don't. Yes.
Yes.
Thank you.
Leave the mics on the chairs.
Watch out.
All right, good job, man. Good job, guys. Come on down. Yeah, you are in this one. You might as well stay up there. All right, go. We got one last panel before lunch, and it's going to be a good one. Take the middle seat. And this is the panel where I am really looking forward to. So, Trey, quick question. Well, I don't know if you want to raise your hand, but Raise your hand if you knew about the Bitcoin space or you were in the Bitcoin space pre-2011. All right, I got a couple of hands. So I'm really looking forward to this panel, and it will, it'll take a stroll down memory lane, and I will let Stacy Herbert take over.
Okay, did that previous session hack 15 of our minutes? Did they?
No, you could.
Take our
You're at
supply of
45.
time?
Well, Giacomo was on it, and
Yeah,
no,
talk
you
to
weren't the
Cole.
bad one this time.
So Max and I got involved in Bitcoin in 2011, and that was the year of the first big bubble, which brought in all the speculators and changed the face of Bitcoin. But I think it's really important that we're here in Las Vegas because this is the West, and the nature of the West in America is still very similar to the original pioneers. All the gunslingers, the outlaws, the prostitutes, the missionaries, the freaks that came out here that were mad enough to cross the desert in wagons and, basically fight the native people who lived there. And pre-2011, I kind of think of early Bitcoin as those pioneers. I mean, they were totally freaks, outlaws, pornographers, gamers, and the cypherpunks were the very first. So I want to look at that nature of early Bitcoin and how it brought us to where we are. So the two guys at the end, Peter Todd and Adam Back, you guys were cypherpunks, right? You were on the cypherpunk mailing list. Tell us about, so this is pre-2008, October 31st, 2008. What was the role of the cypherpunks? What were they trying to create with Bitcoin? Why did they create it? What were the conversations going on, Adam Back, in those cypherpunk mailing lists?
Well, I mean, it's not clear that they created Bitcoin, but they certainly tried to create things like it, and that much we know. So like B-Money, BitGold, and Halfpennies, reusable proof of work. So I think they were interested to have, people were interested in privacy technology, and things like Tor were operated by volunteers, and so they were interested to have, freedom of association, freedom of speech, and also it's like transactional privacy, so that you could buy things online, for example. And so there was a lot of interest to solve the final thing. There were ways to communicate privately, to discuss things, to publish things anonymously, some censor-resistant publishing, but no way to transact privately. And so they're interested to solve that problem. Now, apparently there were people interested in two aspects of this. So I was talking with Nick Szabo recently, who said that he was actually significantly interested in monetary reform, so the kind of gold aspect. And other people were interested in uncensorable money, bearer money, things like that. So now in Bitcoin, those come together and you get both. But there was certainly a prospect that a system could have been built that had only one of those properties, that had only privacy, but was, let's say, backed by dollars or something like that.
Well, and also, I mean, you do have the potential of having payment systems that are based on money that inflates. I mean, my early ideas for Bitcoin back when I was like 16, amongst many things that they were broken, one of the things that was broken is I couldn't figure out how to get inflation under control. And the reason why is, of course, my idea about how to make Bitcoin was dead wrong. But at least at an economical level, you could imagine a payment system where your money is going to inflate away to nothing, yet it's still useful for transacting from one person to another. And I was interested in censorship-resistant money because, I mean, that's an important requirement for politics. Even if you want to have a protest, someone needs to pay the bills to go and buy the sticks for the signs to attach to.
So, I mean, I think where Hashcash as a proof of work came into this money story is people had seen DigiCash, which had extremely strong privacy and crypto fungibility, but was centralized, so they'd seen it fail and a double spend database disappear. And so they wanted a way, and to operate it needed a partnership with a bank, and that was hard to achieve. So people saw Hashcash as digital gold. As Peter said, there were technical challenges about how to control inflation, but nevertheless, I think the thing that most attracted people to using it was that it was permissionless, and you could create coins just by mining them. So people saw the opportunity to mine the coins into existence. So just
and these older ones that are infusing us with these cypherpunk ethos values. I think, Peter, didn't you even have an email to Dr. Back, like clear back then?
Yeah, so I wasn't actually on the cryptography mailing list. I was on something called the Blue Sky mailing list. And that's where I first talked to Adam Back and also Hal Finney of our very early efforts to basically try to go and invent Bitcoin, which were all total failures.
You wrote to Hal Finney in 2001. You were
Yeah,
communicating.
I was 16.
Yeah, so I think it's important to understand, like, this has been in the works for decades. And
Yes, I think that's important, that it's
yeah.
like it didn't erupt suddenly from one guy. It was, or one group of people. It was decades in the making.
Yeah, and Peter and I, we were having dinner with Nick Szabo, and Peter was actually arguing a little bit with him, and Nick's argument back was that this is an iterative process. This is an iterative market process of creating the new money and creating new goods that have these monetary properties. And, it's only to be expected that we're going to continue to have this type of iteration that takes place.
And just like the West, Vegas, all these places still have that original sort of ethos of being like, fuck the government, standing up to the government. I think with Bitcoin, you still have that, no matter what, you still have that cypherpunk notion behind it. Max, you created the Hollywood Stock Exchange back in the mid-'90s, and you had that issue that Peter was just talking about in terms of the double spend and inflation and how to create a currency. You created a digital currency that actually had an exchange value.
Yeah, the Hollywood Stock Exchange. I came out of Wall Street in the 80s, and it was a very fertile time for innovation and creativity, and Mike Milken had his heyday, and I was a young stockbroker at that time. And so I grew up to learn this idea that markets and finance are completely plastic, and you just make them however you want, and there's no sacred definition of money. It's whatever gets sold, that's what money is. And during the 90s, I was in Los Angeles. I was very impressed with the SETI project, the Search for Extraterrestrial Intelligence, which is this massive parallel computing project to hunt for radio waves in outer space. And that set me up for Bitcoin in a lot of ways, because it was everything that I was thinking about digital money, and then a massively parallel computing project that would tap into a global expression of what money is. And this seemed like kryptonite to me, to all the bad guys. And when you work on Wall Street, it's like you work in a meat processing plant and you become a vegetarian. Working on Wall Street, you see how much criminality goes on there every single day. It's completely accepted. And fraud is the business model. And so when Bitcoin came around, I was like, this is going to be kryptonite, because there's no way that these guys are going to be able to control this. And so now here we are in 2020, and these guys are getting closer with regulations. One quick side story. With the Hollywood Stock Exchange, people ask me, how come I can't trade box office futures, right? Because Chris Dodd of the Dodd-Frank bill, when Cantor Fitzgerald bought the Hollywood Stock Exchange, at the very last minute, they passed a law called the Dodd-Frank bill, and box office futures contracts are outlawed in America. So Cantor Fitzgerald took a massive hit on that acquisition, and I tried to convince them not to go ahead with their plans, but they did it anyway. And so that's a good lesson, I think, is that especially now when encryption's being attacked and regulated and forced to be disclosed on devices and things like that. So the regulatory battles for this industry the big ones are still ahead of us, I believe.
So, in terms of that ethos of Bitcoin and the cypherpunk ideology is, cryptography used to be considered munitions. So it was an actual U.S. security and national security issue. And here we have Bitcoin. It has become sort of a munition against the banks and against this financial surveillance. But at that time, so after January 10th, 2009, when Hal Finney tweeted running Bitcoin, after that time, how important is it that the only people who joined in on this thing with him were the gamers, were the outlaws, were the pornographers, were the freaks? Like, if it had been like KPMG and Fidelity Bank saying, okay, let's get in this together. Would it have changed the nature of Bitcoin, do you think?
Probably. I mean, I think there's a history. So Tim May, who was one of the Cypherpunks List co-founders and was one of the first people to write about related ideas, he made the point that most innovation comes from the sidelines. So, if you want to change things, just do it. I mean, just build something. If people want to use it, they opt to use it, and it changes people's expectations about what they should be able to use. So, Skype is another example, right? So, Skype got into the telecom industry. If they'd got, and telecom sector is regulated, so if they'd gone to the regulator and said, we want to build a voice over IP video system with free international calling, they would have said, no, you can't do it. Or the groups would have stopped them. So instead they just did it. And the regulators were too slow, it got too widely used, and they couldn't stop it. So I think Bitcoin is something in that area where people just did it. Initially it had no value, no stock, no exchange price, the 10,000 Bitcoin pizza experiment. So people were just playing with it. I mean, it was a kind of hobbyist thing. I think the fact that you could mine it helped add value. There's a psychological phenomena where if something's difficult to do, people ascribe more value to it. It's kind of a fallacy, really. It's kind of labor theory of value, but it's some people have that intuition. So I think the fact that the mining was difficult, fiddly, and people would exchange tips on how to configure graphics cards to do things, made them feel it was valuable, and that maybe had a part to play in bootstrapping a value, because it had to bootstrap somewhere. So I think it's all about permissionless innovation, and then there's a history of sort of open source community technology being found to be agile and good, and later being adopted for more enterprise uses.
I'd make the point. I think the kind of list of people who kind of say got into Bitcoin, I think that's actually much too restrictive. I mean, I know financial people who saw Bitcoin and immediately realized, oh yeah, that's a good idea, I'll go buy some. And I mean, my dad's a standard, Keynesian economist. I mean, used to go do consulting for pension plans. And when I first described what Bitcoin was to him, his reaction was, well, of course that's valuable. It was just completely obvious to him. Like, you have a limited thing, you can send over the internet. That's useful. I don't actually think like this is that radical of an idea. I think what's more radical is being able to actually do it and pull it off. But if you do it in a slightly different way, I mean, I think you'd still get a similar kind of outcome.
But at that time, they show the velocity of Bitcoin from 2009 through present in terms of how often they move. And it does look like a lot of those early Bitcoin are lost forever, or they lost their coin. So that took a while to overcome, I feel like. In 2009, 10, and 11, I mean, these things like Bitcoinica would pop up, and somebody would run off with 53,000 coins, and it just felt like a kind of a game that it wasn't real, and that maybe it would never have value. It was just a game.
But the notion that something's a game and it's not real yet doesn't change who might be interested in playing with it. Yeah. Someone like my dad, if they actually knew some technology, and well, frankly he doesn't, but if he had the technical wherewithal to actually go do something, I mean, he's the type of person who would. I just don't. I'm very just so reluctant to go and say that finance people wouldn't have been interested in this early, because I think it's not necessarily as radical as it sounds, and I think once you understand what it does, it seems kind of obvious. I mean, kind of in the way that, I wouldn't really call gold radical. I think I'd call gold radical in terms of the political parts of it, but in terms of the mechanics of, well, is there this valuable thing and could it be valuable? That's...
Well, of course, Max, you were a banker, so how did you, when you first started talking about Bitcoin in early 2011, like, how did you see the value proposition in it?
It was analog to gold, right? So, I mean, that's the thing about, I understand Peter's point that, okay, somebody who's reasonably involved in finance would get it, but I don't understand why people who are into gold don't get it. I don't understand that. I never did. We came into it on a programming side when gold peaked in 2011, And we transitioned to doing heavy Bitcoin coverage because gold was no longer a hot topic to talk about because it entered into a very long bear market. So this gave us a programming supplement, if you will. The more we talked about it, the more access we had to more key people who would contact us and say, hey, I'm a programmer, I'm a developer, I'm doing this, I'm doing that. So then we just kept putting them on the show, and so on a programming side, it was great. But how do I talk about it to people who are newbies or whatever? I would just, as far as, I just found this wall of resistance. I think there's people who either want to be free, and there's people who want to be slaves. That's it.
Up until 2011, when we started covering it, we were covering the financial crash. So, I mean, that was relevant to Chancellor on brink of second bailout for banks because we were covering the UK and the collapse of the banks there. And when we had a lot of gold bugs, we were talking about gold a lot as, at that time, the only solution to this financial system. And on the first episode that we ever did on Bitcoin, a lot of gold bugs were in there, and they say, what's this Bitcoin? More like a shit coin. That phrase was used back in 2011 about Bitcoin. It was actually their anger that made me even more curious about why are they so afraid of this? Like, this seems weird. I know you had, you were a gold holder and a big gold investor, but you saw very early, like you moved your gold over to Bitcoin at a very opportune time. I don't think I was clever enough to do that at that point, but how did you, what made you do that? How did you see that?
Yeah, so I'd actually become an investor in gold money. That Max and I were both involved with gold money before Bitcoin even existed. And so I was an investor there in, I think, 2005, 2006 timeframe. And then I started a blog, Run to Gold, and I'd had breakfast with Dr. Edwin Vieira, and he gave a talk at the GATA conference, and someone asked, like, well, why do we do this? It seems so bleak. We don't have any chance to get out from this gold price suppression scheme and the monetary repression and everything. This was 2008, middle of 2008. And Dr. Vieira said, well, I don't want to live in 1956 Czechoslovakia with a boot on my neck. So that's why I got more active blogging about gold and the monetary role that it plays in protecting human rights and civil liberties. Stands as a protector against despotic inroads on the part of governments, as Mises says. And so then when I came across Bitcoin, it was very natural to merge, at least for me as a digital native, growing up with LimeWire and Kazaa and all BitTorrent and eGold and the digital games and transferring value over communication channels and dealing with chargebacks and trying to get paid for your thing in the game, right? So for me, immediately, I was able to see the implications of the software code and what it's going to do. And so, that's why I kind of picked it up. And actually on this stage, in Nick Szabo's first public appearance, I asked him the question, what niches should we go after? And he was like, we have to go find particular niches to sell Bitcoin to. And that's exactly what I'd done. I went to the libertarians. They are just crazy, and I want them to have a lot of money on the other side of the wealth transfer. And then also the gold bugs, because they should have understood gold, the role of gold, and therefore the role of Bitcoin as digital gold. Well, Lou Rockwell, I've got the emails. He's not interested in Bitcoin at all, and along with Tom Woods and a bunch of these other libertarians, surprising, you get to hold your own keys to your money. It's scary, technical stuff. And then the gold bugs are just complete troglodytes. James Turk, it takes forever to finally get them to launch. I mean, I bring Bitcoin to the Gold Money board of directors at a quarter. Like, they could have been the exchange, physical gold, physical Bitcoin, and USD, like no Mt. Gox. They totally missed that multi-billion-dollar opportunity because James Turk is, wants to be important as a thought leader. they eventually launched Natajia, which flops on its face like 5 years too late. And, as shareholders in Gold Money, we're not too happy about that. But it just shows that, like, it's not easy to get this. It's so multidisciplinary in so many different areas that are all at work. And
Well, we made a 10-part series called To the Moon, and we asked dozens of people, including yourself, what is Bitcoin? And it's remarkable how right everybody was, but completely different answers. So it is a lot of things. And part of this whole, that first price run-up, I guess it's the title of the show, the 2011 pop. So when we had covered it, it was like somebody in the comments, I looked back at it recently, said, when they were talking about this being a shit coin, is like somebody scammed $50 million out of these people. Think about it, 21 million coins times $2.25 or something. Then it went up to 7 or 14 and then crashed, and then went back up to 30 and then crashed. And you see all these comments, people talking about, fucking Kaiser, you made me lose my life savings. I put 10,000 bucks in and it's all gone now. And but what is the role of, well, I know you have something to say, but also Max, because you've developed a market making technology. What is the role of all those losers and speculators? People act like it's a bad thing that there are speculators in these markets.
Yeah, so first network effect is speculation, these 7 network effects. And the speculation network effect is so strong in human psychology. San Francisco had 800 people when gold was discovered. That city is built because of speculation, and it still operates that way, the center of technology speculation, right? And so just people wanting to chase the rabbit, like they'll chase it up, they'll chase it down, like they want to chase the rabbit all over the place. So, that speculation network effect is so strong. The Dogecoin hasn't even had any updates for 5 years, and it has a $263 million market cap. It was launched as a joke, and it's still like alive because of the speculation network effect. And it's in those early days, it was so hard to buy Bitcoin. I mean, web of trust, sending cash in the mail, hoping you're going to get your Bitcoins, and you had to have so much conviction to actually buy it. Think about it, to actually buy it. And then when it's running up and down, everybody thinks that like hodling is easy. Like, it's not easy, It runs from $2, 25 cents to 32 bucks and crashes to 2. Like, people get shaken out on that. And, when you have this large hodler base and it's an illiquid asset and hard to trade it and hard to buy it and sell it, like, what is the price of it really worth? It's hard to determine that. And Adam and I, we have a friend that the guy actually emailed Satoshi before Bitcoin even got launched out. So he's got a Bitcoin or two, right? And he was selling some of them, and I had introduced him to another friend of mine in Southern California, and we're at the pizza shop negotiating the deal, and the spot price is like $5 for Bitcoin, and he wants $5.25 because it's a large block of the coins. And my friend doesn't have the conviction, and so he passes on the deal. And that 25-cent difference in spot was about $50,000 on the deal because it was 200,000 Bitcoin in one large block. It would be like $2 billion today. And I mean, I'm like, I don't have any money at the time to buy like that because I'd already bought my Bitcoins earlier, right? So, I mean, when you get conviction on something, you just have to buy it. And price discovery is difficult and everything. Like, it's, I mean, it's just hard, And then you got to hodl those things, right?
So Max, your role as a market-making technology guy, and this also lends to Mt. Gox and all the things that went wrong there in terms of price discovery, and the role of speculators in setting this.
Well, a lot of people say, where does the money come from? And it comes from losers.
That's true.
That's where money comes from. Without losers, there would be no cash. And you need capital for capitalism. So God bless the losers. Did I mention Peter Schiff? No. Well, here's the classic case: a gold bug who is attached to their dogma, who was gifted Bitcoin and then lost the password, lost the keys. They lost them within 20 minutes. So that's somebody, that is expendable going forward. We don't need that in the DNA pool, do we? We can survive better as a species if that was weeded out, in my view. But if the question is market making, what about market making? You have the price discovery. That was always a mystery on a lot of these exchanges like Mt. Gox and others, because market making is not easy to accomplish, actually. So to create a price discovery that is reflective of a market, in the New York Stock Exchange, it's done through a specialist system, and the specialist maintains an inventory, and they're allowed to front-run orders. They're allowed to buy or sell ahead of customers to maintain their liquidity. I remember Alan Greenspan, when he was asked this, he said, these specialists on the New York Stock Exchange are engaged in insider trading. He said that technically is true, and they're very restricted, and it's technically illegal, but sometimes in capitalism you need a little wiggle room. So Jamie Dimon heard that, and he said, you know what, I can build a bank based on that. Yeah, it's a wiggle room bank. Every single thing we do is wiggle room. We don't actually offer an honest service. But that wiggle room became the moral hazard of the next 30 years of finance. Everything is now moral hazard because everything gets bailed out. This is why Bitcoin is growing in strength. But anyway, on the market making question. So you have, with Mt. Gox, it was clear, even from the Hollywood Stock Exchange, that this thing was going to blow up, because you could look at the order books to some degree and get a feel for it, and you could figure out that they were front-running massively in a way that was going to not end well. And so that was why we told people on the show to stay away from Mt. Gox. We warned people and said, get your keys off Mt. Gox. It looks like it's going to blow. Sure enough, it did.
Peter, it looks like you wanted to jump in there.
Well, so a point I kind of make is, it's interesting you keep on talking about like the gold bugs versus the Bitcoin people. And something I think I've kind of noticed is how being a gold bug is actually a really pessimistic outlook. And whereas Keynesian, like, all right, it's going to keep growing up by 8% every year. That's a really optimistic outlook. It's a really nice feeling. Think, I can just go and rely on my compound interest to go retire. It's just going to keep going up, keep going up. We'll figure out some way to keep investing and so on, keep pumping money into all this. And it's interesting seeing how you talk about these gold bugs, like I think there's this very pessimistic thing, whereas Bitcoiners are sort of this weird in between, especially in the early days, where there was so much potential. And then I think the psychology of people getting into that is actually quite different from the psychology of the gold bugs, whereas the rationale is kind of the same.
Yeah, it was, the gold bugs, like, by the way, we went to many conferences with gold bugs, and they were all in suits and looking very nice and sharp, and then Max Ash and Lambos.
Yeah, I mean, part of the market process, one is if you calculate correctly economically, you have profits. If you are incorrect, you have losses. That's Mises. So Peter Schiff, he's racking up a lot of goose eggs. But I put out a poll on Twitter, like a month ago or whatever, and I asked what are the most important classes in the ecosystem? The buyers of last resort, the hodlers of last resort, the sellers, or the miners, right? And I found it very interesting that over 60% of the responses said the hodlers of last resort. But Dr. Back made a reply on there, and someone else made one with the same sentiment, that it takes a lot of conviction to hold the falling knife, but it takes more conviction to buy the falling knife. And so the hodlers, help provide that price floor, but the buyers of last resort are the ones who will buy when no one else will. And then they'll catch that falling knife and they start the recovery up. And and there were times when $100 of cash in an envelope was the entire buy side volume in Bitcoin globally. So it's who actually has real conviction in the asset, and it's going to be the hodlers who will hold it to zero to become worthless, and it's going to be the buyers of last resort who kickstart the recovery. And there is a difference between the two, And the difference is that the buyer of last resort has to have financial resources to step in to do the buying, right? Like the hodler can hold that thing to zero, but he can't get the price to go up because he has no resources to reallocate to buy to move that price. So you have to, they're comrade in arms, but really it's the buyers of last resort that are the most important when you're looking at price discovery on an asset.
Keep in mind, a hodler of last resort can just be someone who time locks their coins. You can be in that position involuntarily. Whereas if you're going to buy, well, if you're involuntarily buying, something really wrong has happened. Maybe it's called taxation.
Yeah, I mean, I think the buyers are. I think people can get stuck sitting on the fence, so they're indecisive. I saw it during the period where there were forks on the market and futures on the forks. And so people who were indecisive and didn't really have an opinion, felt underinformed, or were just scared, would do nothing. And if you do nothing, that's like the holder, and you don't actually move the price. I mean, okay, you reduce the supply on the markets, you haven't panic sold, but it's the people who, took significant financial risks to buy the fork futures, to sell, to short it, basically, who profited. And I think that market signal was actually instrumental in forming opinion around it, right? Because the fork couldn't seem to hold 10%, and effectively that fork is now in the low fives or something. So it seems like the people who are activists, there's this theory about the intolerant minority. So the activist investors are the people who kind of lead the market sentiment and turn things around. So yeah, I think people have all these philosophical claims, but unless you've skin in the game and vote, you're actually sitting on the fence.
Well, yeah, to follow up on that, too, so you mentioned the hard forks there. So you have two hard forks that I'm aware of that are without a lot of buying support at the moment, but the principals are big bag holders, right? And so they are resorting to getting some kind of attention their way by parading around in public as absurd freaks, right? I mean, Craig is trying to gain attention as a deranged freak to get someone to buy this piece of shit before it goes to zero.
Well, and another part is just the flawed economic thinking that they have. And what I mean by that is you've got 8.3 million B caches that have moved since the fork, which means you have 9 million that haven't moved. And these people got them passively, and they might not necessarily have conviction and want them. And so
or those are all the people who lost their private keys.
Yeah, I doubt it, because some of those over 10 million Bitcoins have moved since that fork. So there are at least 2 million B caches that the Bitcoins have moved, but the B caches haven't, right? And it's like whack-a-mole. If someone sticks up a bid, you're going to whack them on the head with all that extra B cache supply. And so, we've seen a lot of different innovations. Like Stellar's a good example, where they did an airdrop where you had to affirmatively claim. And so that way they avoid having this large overhang of supply that can get dropped on your head if you're trying to be in the intolerant minority going against the consensus.
When was the first, well, first of all, let me ask you, is it halving or halvening? I know this is the big controversy today in these. I say halvening.
It's whatever you want it to be. It's a free market.
Okay.
I like halvening because it's a unique Bitcoin word.
Yeah.
Bitcoiners like memes and unique words.
Plus, if you say having, it sounds like having, like I'm having this. Anyway, when was the first halvening? Did and that impact back in those early days of Bitcoin? But how do you think what sort of impact do you think it's going to have on Bitcoin in terms of the supply to buy?
Well, I mean, there's some debate around the stock to flow discussion, right? The reduction in new supply that comes after the halving, if the buying demand is constant, then you would expect the price to increase around that. So that seems straightforward enough. Now it does also trigger some kind of economic cycle for miners. If the price doesn't move across the halving, the less efficient miners will leave the market because they will be below break even. So I mean, historically, there were conspiracy theories or concerns about death spirals, but they didn't remotely happen in practice. There are too many people with different economic factors. You know, people on power sharing schemes, people with new equipment, it's more efficient. People who will keep running equipment and then maybe default on a power bill later, or mine for a bit, hoping things to see how it goes, like, you know, see what happens afterwards if they've got a cash reserves to do that. So in practice, it hasn't really proven to be a problem. And I think it's generally positive. You know, it's something for people to talk about, sets an economic pulse. Now, clearly, it could have been a smooth function, but it wasn't. And now that we have it, it's I don't think people are going to want to change it.
Yeah, I think, like, if we look at what the Federal Reserve, really the only control they have is over the throttle, how much gas goes into the engine. They don't really have much control over what happens after gas gets in the engine. And rates.